Hello, folks. It is Sunday, November 6th. I have moved. I am no longer in San Diego. I'm in a small town, population well under 50,000 people. I just got my computer set back up. My good microphone is not behaving today, so the sound is a little bit different, and I've got a little bit of a head cold. So, two things going on with the sound today. Let's do a market overview. We'll start with gold like we usually do. Now this is gold in the monthly time frame. And I've been watching this as a continuation pattern. And ideally, gold would have bounced off of both the horizontal support level and the lower median line extension of this shift pitchfork. Well, obviously that hasn't happened. I'm going to give gold the benefit of the doubt for now based on Friday's action and the action in the lower time frames. The lower time frame charts look better than this. So let's look at in the weekly. This is what I'm referring to. You can see how gold has found support multiple times along this horizontal level, currently pushing up into resistance at the 10-week moving average, and then of course this horizontal support resistance zone, and more support than resistance. So we've got multiple times where this level has provided support, and it was only recently that it became resistance. And so hopefully after our strong move Friday, we'll see gold push right back through that resistance level and on up towards the 40-week moving average. In the daily time frame, there's the big, that was Friday's big bar. We got 45, almost $46 move on Friday, pushed right through the 20-day moving average, found resistance at the 50-day moving average and the median line of this modified shift pitchfork, and then pulled back a little bit from that level. So nice move in gold on Friday. Let's expand MACD here. Yeah, so we got a new buy signal on Friday. Stochastics shot up to the upper end of its range, so lots of energy in this move. Again, would like to see some follow through. Silver looks even stronger. So here's silver in the monthly time frame, and notice that it did not invalidate its continuation pattern. So found support at the horizontal level and the lower median line extension of this shift pitchfork. Excuse me, that's a modified shift pitchfork. And then got a nice bounce. So currently on the current month, we're getting a nice move in silver. MACD is right on the borderline of bear or bull mode. We've got one leg in bear mode, one leg still in bull mode, and histogram curving up nicely. So hopefully we'll see that move continue and get a new MACD buy signal here in the monthly time frame. Energy is rising off the low level. And so in the weekly time frame, again, nice strong move last week. Big push off the 10-week moving average as support. Looks like this week has opened and opening at the level of last week's close. So no surprise there. Just overhead, we've got the 40-day moving average acting as resistance, and then this horizontal support resistance level, which will also provide some resistance to work through. We've got a MACD is on a buy signal. still in bear mode. Energy is very elevated. So silver looking pretty good in the weekly time frame. Of course, here in the daily time frame, that silver really looks good, and has been for the last 2 weeks or so, where silver has been working its way gradually higher, little incremental moves higher, and also for finding support along the 20-week and, 20-day and 50-day moving averages. And then on Friday, obviously, popped higher with almost a 7%. I think it's 6.9% move. Let's look. 6.97. So yeah, almost a 7% move. $1.35. So really big move on Friday, and then on big volume. So nice having the volume behind that kind of price movement. It adds credence to the move, makes it more likely that it's not a fluke. So silver is looking stronger than gold at this point, and it depends on who you read. One person will tell you that silver always leads in a rally. Somebody else will say that gold always leads. In truth, they flip-flop. They trade back and forth, and it doesn't really matter. Silver has been incredibly tight in the physical markets, and so not surprising to me that assuming that this is a rally kicking off, that it would do so with silver in the lead because of the tightness of the physical market. Franklin Sanders, in his updates, has been talking about increasing tightness in the physical market, silver, and that lead times continue to stretch. And so not surprising if you end up on a wait list to purchase physical silver. So, all right, let's keep rolling. The mining stocks, here we are in the monthly time frame. This is looking pretty good. The GDXJ is my proxy for the mining stocks. We found support along the lower side of this channel. It's an upward sloping price channel that has provided support, and looks like price is going to climb from that level now. MACD still in bear mode. Histogram hinting that MACD wants to turn up. Energy is still very low, but looks like it might be climbing. In the weekly time frame, had a little bit of an upward movement last week. Price pushed up above the 10-week moving average, found resistance. This is the median line of a modified shift pitchfork. So price was unable to push above that level. We'll see what it can do in this coming week. MACD is very oversold. Looks like it's trying to turn up. We do have a new buy signal in MACD. As you can see, that happened 3 weeks ago, and energy is rising off a low level. So nice signs in the mining stocks. They're still lagging the metal. And of course, the overall stock market has been weak. So not surprising that the mining stocks would, not reasonable to expect a big rally in the mining stocks based on what's going on in the overall markets. Although, a continuation of the precious metals rally, we ought to see the mining stocks join in and participate in that rally. Of course, we're in the strong season for precious metals through the end of February, I believe. So this is a good time of the year for the metals to rally. This GDXJ in the daily time frame, again, we can see that nice move on Friday. We've got a 10% move to the upside, started with a big gap open on Friday, and then a nice solid move. So although it's not very visually impressive on a percentage basis, that was a very nice move on Friday. Buy signal in MACD. We've got MACD heading up into bull mode, which will be a nice change. So again, some positive indications from the mining stocks. Here is the US dollar in the monthly time frame. Currently has rolled over from its upward movement. We've got some strength in the euro, and I believe in the yen as well. We'll look at currencies in another video. The dollar obviously found resistance at the median line extension of this shift pitchfork, and then rolled over at that level. Notice as well that MACD reached the level of the prior high in MACD, and this is not uncommon, and that's why I keep an eye on MACD prior highs and lows. It's like price ran out of energy when MACD reached that level, and price rolled over along with MACD. Now MACD is continuing at that level, remains at that level, hasn't rolled over strongly. We'll see in the lower time frames that it looks a little bit different. Energy still very elevated. In the weekly time frame, price, or the dollar, is just following the 10-week moving average higher. That last week's candle certainly looks toppy. Big long wick on that doji candlestick suggests that the dollar is about to head lower. MACD still in bull mode, but a new sell signal at the end of last week. Yeah, so would not be surprising to see the dollar head lower in the coming week. Energy remains very elevated. Here in the daily time frame, we can see that the dollar made a big move down Friday, which is part of what propelled the precious metals higher. The dollar pushed through support at the 50-day moving average, and also pushed below the lower median line of this modified shift pitchfork, but not decisively. So we may see a little bit of a bounce there on Monday. MACD is on a sell signal, remains in bull mode, but just barely. And excuse me, folks. This is what I was saying in the monthly time frame, where MACD reached the level of the prior highs, and in the monthly time frame, MACD is still at that level. Here in the daily time frame, MACD has rolled over and headed lower. Energy is just above or just below mid level. On the debt markets, so interest rates have continued higher, as we do. Seems like every time we look at this chart, I have to move it a little bit higher to encompass the latest moves in interest rates. No indication that the Fed is going to stop raising interest rates. They just raised another 3/4 point. You know, I'm of the opinion that the natural tendency for interest rates right now is to head higher. That's part of a global debt collapse. It's not only the central banks moving interest rates higher, it's the debt markets collapsing that is causing interest rates to move higher. Nobody wants to buy debt instruments. Foreign buyers have totally stepped away from the markets. They don't want to buy foreign debts. Everybody's afraid of the sanctions game. You know, we're sanctioning this country, we're sanctioning that country, and so why would you go buy the debt of a country that might turn around and sanction you and try to harm you economically? It just doesn't make sense. And so we're seeing dramatic changes in the debt markets right now. And it's across the board. So here's the 10-year Treasury note. Found support on the, we're in the daily time frame. So found support on the 20-day moving average and popped a little bit higher. MACD is overbought, and so MACD is holding back any higher move in the 10-year for now, but no reason to expect that to continue. Would expect to see higher rates in the 10-year. In the 30-year, notice that the continuation pattern in the 30-year, this is the this is the weekly time frame, 30-year Treasury bond. This was the midpoint of the continuation pattern. We can call it a flag pattern, a pennant, if you will. And the continuation pattern, or the flag, marks the halfway point of the move. And that's what we're seeing here. This leg was the first half of the move. This is the same size, so it's a duplicate of this, the lower trend line, and we duplicate it, move it to the upside, and we can see that price duplicated the price movement that it made going into the flag. And so this is a completed pattern. We'll see what the 30-year wants to do next. Obviously, it's doing a sideways consolidation at this point, or a high consolidation, however you want to think of that. I would not call it a correction or a rollover. I'd just call it a sideways move for now. MACD remains in bull mode on a buy signal, and energy is very elevated. So reasonable to expect that the 30-year will continue higher. Here's 30-year mortgage rates, almost 8%, 30-year fixed. Even the VA rate, 7.6%. So that's hurting, obviously that's hurting the real estate markets. Bitcoin just sideways bumping. Got some nice volume last week. This is the daily time frame, so got a bump on Friday, some nice volume, a little bit higher in price. Looks like we got a buy signal, yeah. Oh, and have moved up into bull mode. So perhaps we'll see some continuation in this upward movement in Bitcoin. Energy is elevated, so that's a change. The equity markets, here's the S&P 500 in the daily time frame. What I want to point out in the equity markets is that, in my opinion, the S&P 500 and the NASDAQ are more legitimate representations of what's going on in equities right now than the Dow. The Dow is only 30 stocks. And so, you know, the Dow currently is up here. Let's see. Yeah, here's the Dow. So the Dow's up here playing with its 200-day moving average and actually looking kind of frisky, like it wants to head higher. But if we look at the S&P 500 in the daily time frame, it's down here flirting with the 20 and 50-day moving averages, and then same thing in NASDAQ, where price, well, here in NASDAQ's actually below the 20-day moving average. And so in my opinion, this was just another bear market rally that has rolled over. Price reached up to the 50-day moving average, rolled over and headed lower. Let's look at the weekly time frame. Same story. Bear market rally, reached the 10-week moving average and rolled over. Got a little bit of a bounce at the end of the week. MACD in bear mode. Energy very low. In the monthly time frame, notice that price is sitting right on this, sitting right on this support level from the parabola and this horizontal support level. If this level lets go, we've got a big move. There's no support in this time frame for the NASDAQ until we get down to here. Well, I guess we could argue that, you know, down here there's some support. So anyway, there's a 10 to 15% drop in the NASDAQ if this current level gives way in the monthly time frame. MACD is dropping towards bear mode. Energy is very low. Now let's go back to S&P 500. Here we are in the daily time frame. So we're sitting with support at the 20-day moving average. There's also a minor horizontal support level. We've got support. This is the median line of a shift pitchfork. And notice that price bounced on Friday. So we got a pretty nice bounce. Found resistance at the 50-day moving average and pulled back from that level. Let's see, what's MACD is still on a buy signal, right on the cusp of dropping into bear mode. Energy is just below mid-range. In the weekly time frame, price is playing with support at the 10-week moving average. Currently finding support there. We got a little bit of a bounce last week. MACD is in bear mode. Energy just below mid-range. In the monthly time frame, we got a bounce off of this 24% decline. This pink line, that's our 20%, so that's our bear market level. 20% decline is bear market. So it looks like at the close we are back in bear mode. So with support just below. MACD in bull mode, but on a sell signal, energy is very low. Here we are in the Dow daily, looking frisky, playing with resistance at the 200-day moving average. In the weekly time frame, looks like the 40-week moving average is providing support. Somewhat bullish candlestick with the longer, lower wick. MACD on a buy signal in bear mode, energy elevated. So in the monthly time frame, the Dow is not in bear market territory, well above the 20% level, which is the pink dashed line. But again, the Dow is only 30 stocks, and I would suggest that the SPX and NASDAQ are more indicative of what the equity markets are doing right now. Here's Brent crude finding support at the $100 level. Of course, we've got the SPR release continues. That will probably end after the election next week on the 8th, which will add some support to oil prices. We'll probably see oil head higher. And I'm running out of energy, folks. I'm going to wrap it up here. Good chatting with you again, and I will talk to you soon.